Right now, nearly $1 million in real money is betting that the United States and Iran will not strike a nuclear deal by June 30th, and the numbers suggest they might be right. So what exactly are we looking at here? Polymarket is essentially a stock market for future events, where people bet real money on real outcomes. Think of it like a massive opinion poll, except instead of just asking people what they think, traders have to put their money where their mouth is. This particular market is asking one simple question: will the US and Iran reach a nuclear agreement by June 30th? Yes means a deal gets done. No means we hit that deadline with no agreement, and right now the smart money is heavily betting no. Let's break down what these numbers actually mean. When you see 21% yes and 79% no, here's the easiest way to think about it. If you bet $100 on yes and you're right, you'd win about $380 back. If you bet $100 on no and you're right, you'd only win about $27 back. The market is saying a deal is about as likely as rolling a 1 on a 6-sided die. Now here's what's really interesting about the price action. 30 days ago, this market was trading at 22.5% for yes. Today, it's at 21%. That's barely moved. In prediction market terms, that's like a flat line on life support. No major events have shaken trader confidence. No diplomatic breakthroughs, no major setbacks, just steady pessimism. The $973,000 in total volume tells us something important too. That's not retail investors throwing around lunch money. That's serious traders putting serious capital behind their conviction that this deal isn't happening. So what does the market know that the average news consumer might not? First, nuclear negotiations between the US and Iran have a brutal track record. We've been through this dance before. The original Joint Comprehensive Plan of Action took years to negotiate, got scrapped, and attempts to revive it have been stuck in diplomatic quicksand since 2021. The market remembers this history. Second, the domestic politics are brutal on both sides. In the US, any Iran deal faces massive congressional skepticism, especially with ongoing tensions in the Middle East. In Iran, hardliners have consistently undermined moderate negotiating positions. The market is pricing in these political realities that often get glossed over in optimistic diplomatic reporting. Third, there's the timeline problem. June 30th is only 85 days away. Modern nuclear agreements aren't hammered out in 3 months. They require extensive verification protocols, sanctions relief mechanisms, and legislative reviews. The market is essentially saying there's not enough time left on the clock. But here's what the market might be missing or underestimating. Diplomatic breakthroughs can happen fast when the right incentives align. Both countries face economic pressures that could accelerate negotiations. Iran's economy is crushed by sanctions, and the US wants regional stability. Sometimes that creates surprising momentum. Also, the market might be too anchored to past failures. This isn't 2015 or 2021. The geopolitical landscape has shifted. Russia's isolation has changed Iran's strategic calculations, and US energy politics have evolved. The market could be fighting the last war instead of analyzing current realities. For yes to win, we'd need to see rapid progress on 3 fronts: Iran accepting limits on uranium enrichment, the US offering meaningful sanctions relief, and both sides getting domestic political cover for compromise. It's a narrow path, but not impossible. Our model puts no at 21% probability versus the market's 79% for no. That gives us a negative 5% edge, meaning we're slightly less optimistic than the crowd. Here's exactly why we think the market might actually be underestimating no. First, the time constraint is even tighter than it appears. June 30th doesn't just mean reaching an agreement in principle. It means a finalized, implementable deal that both governments can actually execute. That's an incredibly high bar for 85 days. Second, regional tensions are escalating, not cooling down. Every proxy conflict, every drone strike, every escalation makes it harder for either side to look like they're making concessions. The market might not be fully pricing in how quickly external events can derail negotiations. Third, the verification and enforcement mechanisms that killed previous attempts haven't gotten any easier to solve. These are the technical details that cause negotiations to collapse at the finish line. We're rating our confidence at 2 out of 5 stars because, frankly, predicting diplomatic outcomes is incredibly difficult, but the data points toward no, and we're